January 30th, 2024. The whole day was an expanding triangle, you can see, which is essentially a flag from this spike yesterday. So you can see we got a spike, and now we have an expanding triangle, which is potential final flag. And tomorrow there's an FOMC announcement at 2 p.m. Eastern Standard Time. So I assume the market will be relatively quiet tomorrow and probably stay within this flag until we get the announcement, and then you get a dramatic move in either direction. As a reminder, I don't make videos on FOMC days. Big bull bar on bar one, but it's kind of in the middle of this overall trading range. It's really not all that great. You can see that we have a magnet up here that'll probably get tested the close of this bar. So the bulls who bought this close probably able to scale lower and make money. And you get bad follow through for the bulls who bought above one on bar two. Difficult to want to be long here because you're too high in a trading range, but you also don't want to be short betting against this. So I would rather just be flat. Inside bar high one on bar three, but really not ideal. You're buying probably too high in a trading range. And the follow through on 4 and 5, you notice, really isn't all that good. And I think something that's really important to note is the size of these bars. Look at the bar size on 2 through 5. Really not all that great. If you're, if you were long in here, you're getting huge bull bars, and now you're getting these really small bars. So that makes me think that, even if we test up here, we're probably not going very much higher. So I'd, just generally rather be flat. And then a doji bar on bar 6 is disappointing for the bulls, and they all sell out, and that causes the big sell-off on bar 7. Now, what about bar 7? Are you buying? Well, bar 7 is kind of a difficult bar. I don't think that I would, I wouldn't be scaling in below 6 because this is probably just getting high in a trading range, but I don't think I would sell 6 either. So 7 really, to me, it's just a trading range bar. This whole day was pretty much just a big trading range day, and everything was, really difficult to want to take. There were a couple of reasonable entries, but for the most part, it was a pretty difficult day for stop orders. At least you just have to be patient. Reversal up on 8, but if you're buying 8, you're buying right where the bulls who bought below 6 got trapped. So really not all that good. Do you want to buy it, or do you want to sell above 8? Probably not, because it could be a double bottom with 1. So again, if you're buying 8, you're buying too high in a trading range as well. Just not all that good. Bad follow through 9. Double bottom 10, but again, middle of a trading range, not all that good. Disappointment on 11. And then 12 tries to break out to the downside, but it runs into the same channel line that the bulls have been running into all day. And you end up getting disappointing doji bar 12. Do you buy above 12? It's a wedge, 1, 2, 3, reversal up, but I wouldn't take it. I think that, it's you get a bear close and the bar is too big. So while you do get a bull entry bar on 13, it's probably not going to last. The bar is pretty small, and you get disappointment on 14, sure enough. 15, probably, bad follow through for the low one. I was looking, for a potential swing short in here somewhere for a breakout below. I was overall a bit more bearish on the day. I thought we might end up getting some sort of measure move down and try to close the gap with this high. And, I had mentioned yesterday that sometimes when you overshoot a price really quickly, you have to retest it. So I was wondering if we might have to come all the way back down to here, which is also around this high, and a couple measured moves. So I thought there was enough reason for us to potentially get in here, but I needed, good reason to sell. And we just never really got it. You could argue, some traders would argue that 17 is the reason to sell, but you need it to close better is the reality. If you're going to sell this low in what's definitely looks like a developing trading range, I think you need 17 to close on its low. Otherwise, it's a trap too often, like it was here. Reversal up on 18. Do you buy 18? You probably can, but if you buy 18, you're buying right on the moving average, and you're buying where there's so much overlap that it's just really hard to want to do anything. And then you get disappointment on 19 and 20 doji bars. So you're going to hold long a buying above 18, and you get 2 doji bars to follow through. None of it's really ideal. 21, 22, big tails on the top. And then you get some follow through on 23, maybe by the close, but big tail on the top and bottom. Maybe by the close 24, but the tail on 24 overlaps the 22 high. So the limit order bears who sold and scaled in higher got out at break even during 24. So really not excellent. Follow through for the bulls 25, 26. But now we're around this close. So probably going to be some sellers, and we're getting high in the trading range. When you're thinking about a bull trend, does this look like a bull trend to you? Or does this look like a leg in a trading range? To me, lots of overlap, big tails. To me, it looks like a leg in a trading range. And so any sort of breakout is probably going to fail. First reversal down 27 and a bull bar 28, but this could be a couple legs up. And disappointment 29. Doji bar 30. So it's an II 2930, which is a final flag. So it's a final flag at the top of a trading range. So really, more likely that we're going to get some sort of reversal down here or go sideways. And you end up getting a failed breakout above on 31 and disappointing follow through 32. So we essentially form an exact double top with around yesterday's high. 33 closing somewhat near its low. Can you sell 33? I think 33 is a credible sell. It's 3 pushes up, and it's probably okay to take for a swing. If you don't like 33, you wait for follow through, which you get on 34. 34, maybe sell the close. 35, it's definitely sell the close for at least a second leg. You get surprise follow through 36, 37. Bears able to make 5 points, but not quite 10. I don't know if they made 7.5 in the middle. So they made about 7.5 points. Sometimes, I thought that 5 points wasn't enough to scalp. I sold the close at 35, and I thought that 5 points, I was waiting for a little more. But I thought 10 was a bit aggressive before taking some off. And I was, kind of deciding when 37 closed, and then I decided on the close of 37, I had a little more than 5 points. So I just kind of exited a piece and then got on the rest above 38. But my point being, I thought that, 7.5, maybe find the middle ground, and that's a better area to sell. Or to exit your shorts, and you get follow through for the Bears on 37. So exactly. So 35, 36, 37, sell the close. But disappointing breakout, probably not going to succeed. And 38 breakout fails. Some traders might exit above 38. Low 1, 39, and a second leg up on 40. So you now have 2 legs sideways tucked for the bulls. 41, doji follow through bar and reversal down on 42. It's a low 2 short. You could argue it's a low 1 short. Do you sell 42? If you're always in, I suppose you can. Follow through for the Bears on 43, but not breaking to a new low. Though back to sell the close, technically with a pair of bear bars, but you're low in a trading range. So it's low probability if you're selling down here. And then you get a reversal up 44. Traders start to exit and you get follow through on 45. You can definitely buy 45. That was one of the better trades on the day. You're looking for a breakout above the top of this neckline and a measured move up, maybe something like this. More conservative bears, bulls might choose something like that. Follow through for the bulls on 46, doji 47, and then good bar 48. But you're so high in the trading range at this point, it's probably not worth buying. And the risk is so big, traders are probably going to look to take some off. And you can see bulls were able to make 4 points, but not quite 5. So traders exiting with more like 4 points. Disappointment, 49. If you bought it above 48, you wanted to see a big bull bar 49, testing maybe back to the 33 low, and you don't get it. 50. It's a low 1 short, but after all this, I wouldn't take it. Some follow through 51, outside down with big tails, and more follow through 52, but I think the Bears need 1 more bar, so they're probably not going to get it. And additionally, this was pretty strong, so we might have to go a bit more sideways before we get any sort of reversal. And you get disappointing doji bar 53 and 54. Low 2 short, 55. It's a double top of 51, lower high, but I don't think it's all that good. I think if you're selling here, you're selling, I thought the Bears had a lot of chances to go down. And so I'm just getting less and less convinced essentially that we're going to go down. That's something that you kind of learn to see is what, if a side keeps trying and they're starting to fail, like for example, like here, the Bears had a chance to go down 36. They had clear, strong momentum, and then they failed. You can see. So the Bears said, okay, so maybe we'll try again 42. And then they failed again. You start getting strong bars in the other direction. You probably got to look to get long above 45 and certainly get out of shorts. And, it makes me think when you're over here, you're thinking, well, the Bears already had a couple chances, and this is a pretty strong move. So I don't really know how far this is going to go. 55, traders probably going to scalp, which they do, 56. And then, disappointment 56, some buy back their shorts at the market, causing 57. Doji follow through on 58, so not all that great. Follow through for the bulls, 59, 60, 61, but 1, 2, 3 pushes up, not that good. This is probably still strong enough for a better second leg than this, so you have to keep in mind, even if we could pull back all the way here, we might still be due to go down a little bit. Oh, my bad. So we essentially formed a double top up here, tried to get the reversal down 67, 68, and then 69 deep pullback. Bears, what are they looking to sell? More of the 50% pullback than anything else. So you get disappointment, 69, and then inside bar 70, traders probably exit. So really, and then, it's low, very low probability. You can see 72 was a failed breakout, and then you get a big bear bar 73, but not worth selling. It was a low probability breakout to the downside here. Overall, I think traders more expecting sideways. So overall, expanding triangle day, I think 18 was okay, but really difficult, and probably could have sold this. Definitely an okay buy 45, but if you're taking these trades, you probably need to be taking a piece off once you get 5 points. And maybe even a little less. I mean, if you buy up at 45 and you have 4 points, your true risk is basically zero. So okay to take a piece off for sure, because then otherwise you're getting out down here. Or, I would say get out below 50. That's probably smart. You can always buy again if it turns up strongly. On the daily chart, really small bar, like 15, 18-point bar, but most of that, it was like 14 up until the last couple minutes of the day. Obviously, a small bear close. You might get some traders selling, hoping it's a wedge of some kind, 1, 2, 3. That's probably not very good shape though. But overall, we're a little overbought. And tomorrow is the FOMC announcement and the last day of the month. So when you get those two things combining into one, it can be a pretty explosive day generally. I don't know. We're obviously too far away from, the open for it to close anywhere near the open. And we're probably too far away from the midpoint of the month. So both bears want to close below the midpoint of the month, but they probably won't get it because that's 100 plus points away. So you need something, it's the FOMC announcement. So anything can happen. I suppose there's usually, or not usually, but it's not irregular to get 100-point moves on the FOMC announcement. But bears hoping to get past the midpoint of the bar, or at least make it not close on its high. And yeah, that's pretty much the day. Just as a reminder, I'm probably not going to make a video tomorrow. If I do, it won't be about the actual day. Yeah, that's it.